Hello learners. Hi, how are you all? I hope your examination preparations are going well. In this series of videos, I am trying to help you revise certain topics of CA, Intermediate Accounting and Advanced Accounting in the quick manner. And today we're going to discuss the topic of bonus issue. The follow-up video will be discussing right issue. In the past, we've done videos on redemption of preference shares as well. If there is any topic which you think I can help you in your exam preparation, please do mention it in the comment to this video so that I can come about with that video and help you all in your exam preparations. So let's get started with the topic of bonus issue. This is from chapter 6 of your CA Intermediate Accounting syllabus. The name of the chapter is Accounting for Bonus Issue and Right Issue. However, in this video, we're going to discuss exclusively about bonus issue. Talking about the weightage that is given by ICAI, it is not exclusively for bonus issue chapter, but it is in total for financial statements including cash flow statement and managerial remuneration, redemption of preference shares, redemption of debentures, profit pre and post incorporation, along with bonus and right issue. The weightage is 30 to 35%, of which you can expect about 5 to 10 marks from the chapter of bonus issue. Let's quickly get started with the word bonus issue. What do we mean when we use the word bonus issue? The context of bonus issue can be seen from two perspectives. First perspective is that from the perspective of the company, and the second one is that from the perspective of the shareholder. From the perspective of the company, it is what we call as capitalization of reserves. However, from the perspective of shareholder, it is free share. Till yesterday, he had 3 shares. Now he has plus 1, which is 4 shares with him. However, from the perspective of company, the company had 3 shares issued to a specific shareholder. Company has reserves which belongs to such shareholder, and company, whatever the proportion of reserves belongs to that shareholder, converts that reserves and then adds it onto the capital, and that's what we call as capitalization of reserves. When we use the word capitalization of reserves, we can understand it with the help of a balance sheet this way. In a balance sheet, we'll have starting with shareholders funds, share capital, and then reserves and surplus. If we take some part of this reserves and surplus and then put it onto share capital, that is capitalization of reserves. It is like our age-old Hrithik Roshan step. You take it from the reserves, add it to capital. You take it from the reserves and add it to capital. That's what we call as capitalization of reserves. Can we capitalize any reserves? Is the next question that you should be asking. Can we capitalize P&L account? Can we capitalize debenture redemption reserve? Can we capitalize dividend equalization fund? Can we capitalize workman compensation fund? Can we capitalize investment allowance reserve, export profit reserve? All of these? The answer to that question is here. You cannot capitalize all the reserves, nor can you capitalize from the reserves in the way in which you want. There are specified reserves and there is specific order. We can capitalize the reserves in this order only. Starting with the first one is capital redemption reserve. The first reserve that should be used for the purpose of bonus issue is capital redemption reserve. When an organization has CRR, money cannot be taken from any other reserve for bonus issue. You need to first completely exhaust your CRR. Beyond CRR, if you still want some reserves to capitalize and make bonus issue, that's when we go using other reserves. If not, we'll suffice our entire bonus issue by capital redemption reserve. So the first one is CRR. If CRR is not sufficient for the bonus issue, then we can utilize security premium. So the second reserve that can be used is security premium. After security premium, if even that's not sufficient, you want one more reserve to go for bonus issue, then you can use capital reserve. So the third reserve that can be used is capital reserve. And the last one that we can use is free reserves or distributable profits. Whenever we use the word free reserve or distributable profits, what it means is such profits which are available for the purpose of distribution as dividend. So your investment allowance reserve, export profit fund, debenture redemption reserve, all of these are not available. When I say free reserve, all that I mean is general reserve and P&L account. So these are the reserves which can be used for the purpose of capitalization, that is issue as bonus, and in the same order. First CRR, second security premium, third capital reserve, fourth free reserve. So in any circumstance, we would be giving the last opportunity to general reserve and P&L account to be utilized in bonus issue. The reason is capital redemption reserve cannot be used for any purpose other than bonus issue. The only and only reason for the only and only purpose for which we can use capital redemption reserve is bonus issue. We have covered this again in redemption of preference share video. When you watch it, you will get the connection. And security premiums usage is mentioned under section 52. There are circumstances where security premium can be used to repay premium on redemption of preferences. That is when section 133, that is accounting standards, are not applicable to the company. And security premium can be used to pay premium on redemption of debentures. So there is more than one purpose for which security premium can be used, whereas CRR has only purpose. So first you'll use CRR, then you'll use your security premium. Capital reserve can be used for bonus issue, and capital reserve can also be used to write off goodwill or intangible assets. So when there is such purpose for which it can be utilized, that will come priority number 3. And our free reserves though can be used for anything. It can be used to write off premium against redemption of preference shares. It can be used to write off some assets. It can be used to distribute as dividends and a lot of other purposes. So that will be used at the end. So this is how you utilize reserves. Now when we talk about capitalization of reserves context though we understood. Shall we now see the capital part? Before that, there is a warning sign that you need to note that exists with regard to security premium and capital reserve, which tells us that security premium and capital reserve can be used for bonus issue only and only if it is realized in cash. Meaning, if you have issued certain shares for non-cash consideration, that is against sale of asset, against purchase of asset, or on conversion of debentures to shares, or anything of that sort, or if there is any capital reserve which is arising on capital transaction, some merger transaction or anything. In such circumstances, note that such security premium and capital reserve has not arise because of cash, and you cannot utilize such security premium and capital reserve for bonus issue. Meaning, to utilize security premium and capital reserve for bonus issue, it should have realized in cash. Another point which is noteworthy is when you do revaluation of assets as per accounting standard 10 property, plant and equipment, and the asset is overvalued, like you increase the value of the asset, you create revaluation reserve. Such revaluation reserve cannot be used for bonus issue because it is not realized in cash. I hope you noted this point. Now, talking about the capital part, these are the reserves to be capitalized. Now, this is the same thing that is being told under section 63 of Companies Act also. I've explained it in an easier manner. Now, let's go back to capital. When we talk about share capital, what shares are issued by way of bonus? Can we issue equity shares by way of bonus? Can we issue preference shares by way of bonus? Can we issue both by way of bonus? I hope you have the answer that equity shares to bonus issue is possible, but we really don't know if preference shares can be issued as bonus. This is a question which is thought worthy. I want you to pause the video here and then think and then decide upon the answer whether preference shares can be issued as bonus issue. In a regular class, I give it as an assignment for a day and then tell the answer the next day. But as you're watching the recorded session, I will tell it to you right here. Preference shares can be issued as bonus. If the question is, can a company make bonus issue of preference shares? The answer is yes. I'll give you an announcement of bonus issue all by itself. This is of Radio City, who had issued non-convertible, non-cumulative, redeemable preference shares as bonus. If you would want to read the entire document, that is declaration of bonus in the year 2020, you can pause the video and also take a screenshot and then read it. And at any point of time, if you find this video very useful, please do mention it in the comments as to this video was useful, and also mention the topics on which you want me to come about with another video and help you all revise a topic for your CA intermediate examination. Going forward, now we know that the reserves can be capitalized, and to use it, what reserves can be used and in what order, and is there a possibility of issuing preference shares as bonus. Once we've understood this, there are certain preconditions, certain impacts, certain effects of bonus issue what we need to do. Whenever we make bonus issue, what is the effect of this bonus issue? Because of bonus issue, the shares are issued, the share capital is increasing. share capital of the company is increasing. And as the share capital increases, we are not collecting cash from the shareholder. Instead, we are using our reserves to capitalize and then increase the share capital. We are not writing cash account or bank account debit to share capital. We are writing reserves account debit to share capital. So because we utilize reserves or take the reserves and put it to share capital, our reserves will decrease. Accumulated profits will decrease. Now this might pop up in your mind saying that, sir, so isn't this like issue of dividend? Companies Act very clearly mentions that bonus shares cannot be issued in lieu of dividend. Meaning this might look like dividend. Instead of giving dividend in cash, you give them shares which they can sell in the market to convert to cash. However, a company cannot say that I will not give you dividend because I gave you bonus shares. Company cannot say that I will not give you dividend because I've given you bonus shares. So bonus shares cannot be issued in lieu of dividend. This is the provision mentioned in Companies Act 2013. What all of us need to do. Going further ahead, share capital is increasing, reserves is decreasing, but this will lead to no difference in net assets of the organization because balance sheet asset side we're not touching anything. Balance sheet will still tally at the same. We will take the money from the reserves, put it to capital. So the total on the liability side is also same, total on the asset side is also same. There is no change in net assets. Is there going to be cash inflow? There is not going to be any cash inflow. But there would be change in earnings per share. What is earnings per share? Total earnings divided by number of shares. Total earnings is as per profit and loss account. That would stay constant. Till now the company had issued 1 lakh shares. So it used to divide its total 10 lakh of profit by 1 lakh shares to arrive at 10 rupees as earnings per share. But now company has issued some shares as bonus. For every 10 shares, company has issued 1 share. Now the number of equity shares in the market is no more 1 lakh. It is 1 lakh shares plus bonus of 10,000, making it 1 lakh 10. So in the earnings per share computation as you do under accounting standard 20, the numerator profit available to shareholders will be same. Whereas in the denominator, number of equity shares outstanding will no longer be 1 lakh. It will be 1 lakh 10,000. In our example, for 10 lakh rupees profits, it's no more 1 lakh shares, it is 1 lakh 10,000 shares. So the earnings per share will not be 10, but it will be slightly lesser than 10. And because of this bonus issue, we can conclude that the earnings per share will decrease. What happens in the market? Market mein number of shares will become more. There is more liquidity in the market. And cash flow is not there. Definitely, company is not receiving any cash nor paying any cash. Looking at the conditions for bonus issue. When can the company make bonus issue? Or to make bonus issue, what conditions should the company comply with? The first one, there should be power in the articles of association of the company to make bonus issue. If there is no power in AOA, company has to call for a board meeting proposing change in AOA, call for a general meeting, pass a special resolution, amend the articles of association, and then only go for bonus issue. So there should be power in articles of association. Once there is power in articles of association, board has to recommend, utilizing that power, board has to recommend that will go for bonus issue. And the same has to be authorized in the general meeting by way of a resolution. Once the general meeting may we got resolution, then the company can go ahead for bonus issue provided that shares are fully paid up. And the second thing is there is no default made by the company in repayment of interest, in payment of interest, repayment of debentures which are due for redemption, or repayment of any deposits which are due. So there should be no statutory dues, there should be no default in payment of interest, repayment of debt or deposits. That's when the company can go ahead for bonus issue. I hope you understood the theoretical part of this. Let us now quickly go ahead and then see when we say bonus issue, how many types of bonus issue are there. Just a while ago, I mentioned it to you that to make bonus issue, the shares should be fully paid. What if there is a company which has certain shares which are not fully called up only? Shares are of rupees 10, 6 rupees is called up, 4 rupees is not called. Can the company never do bonus issue? Two options with the company. Option number one, company can make the call for the balance 4 rupees, collect it. By this, they convert their partly paid up shares to fully paid up shares. As now the shares are fully paid up, they can go ahead and then issue bonus shares. Or rather than collecting 4 rupees from the shareholder and then giving them a free share, company can instead increase their paid up value from 6 per share to 10 per share without collecting any money from them. That is by way of bonus issue. Did you not understand? Let me repeat this for you. There are two types of bonus issue. Type number one is issue of fully paid up shares as bonus. This is for shares which are fully paid. For shares which are partly paid up, company can either call for the balance money, receive it, make it a fully paid up share, and then issue another set of fully paid up share as bonus, or company can convert partly paid up share to fully paid up by way of bonus. Let me repeat. If the company already has fully paid up shares, you can issue one more fully paid up share as bonus. If the company has partly paid up shares, it can call for the balance money, receive it in cash, and then issue a fully paid up share as bonus, or convert that partly paid up to fully paid up without collecting any money from the shareholder. That is by way of bonus. What is the difference between these? There are certain reserves which cannot be utilized for the purpose of converting partly paid up to fully paid. However, all the reserves what we mentioned earlier can be used for issue of fully paid up shares as bonus. To mention in precise, capital redemption reserve, the first reserve in the order of reserves to be utilized, can be fully utilized for issue of fully paid up share as bonus. However, CRR cannot be utilized for converting partly paid up shares to fully paid. Next in the list is security premium. Security premium can be utilized to issue fully paid up shares as bonus. However, security premium cannot be utilized to convert partly paid up shares to fully paid up by way of bonus. Talking about the remaining three reserves, capital reserve, general reserve, P&L. That is basically capital reserve and divisible profits. Can be used to either issue fully paid up share as bonus, or capital reserve and general reserve and P&L can be utilized for converting partly paid up shares to fully paid up also. So the condition is, when you are converting partly paid up shares to fully paid up by way of bonus, you cannot utilize CRR and security premium, but you can utilize capital reserve, general reserve and P&L. Don't forget that condition of security premium and capital reserve utilization is subject to the clause that it is realized in cash. I hope you haven't forgotten. Now let's quickly slide into the slide to see how do we account for such issue of bonus shares. Firstly, if it is issue of fully paid up shares as bonus, like I mentioned, our reserves will decrease. What reserves? Capital redemption reserve, security premium, then capital reserve, general reserve. All of these reserves are decreasing, so we debit them. And it is capitalization of reserves. We take from reserves, we put it to capital. Capital is increasing, we credit share capital, and we cannot write this straight away. So what we do is, in between we have one dummy account that we open. What we do is, when we debit all the reserves, we credit one dummy account called bonus to shareholders, and in the next entry we debit this entry bonus to shareholders. So that will get nullified there. Ultimately we'll be left with reserves decreasing, bonus to shareholders getting knocked off, and capital increasing. And this is what we call when we say capitalization of reserves. Are you getting this? Going ahead to the next part, that is when we convert partly paid up shares to fully paid up by way of bonus. In this case, the shares are of rupees 10 and 6 rupees is called up and paid up. Balance 4 rupees per share is not called, not paid. This 10 and 6 is just for example. So the company should first make call for that balance 4 rupees. Like you did in your CA foundation, the journal entry for making share call is share call account debit to share capital. Share call account debit because you are supposed to receive that money, and capital account credit because it's increasing your capital. Will you receive money? Long ago when you used to do issue of shares, you used to write the entry bank account debit to share call. Here you will not write bank account. You will not collect money from the shareholder. Instead, use the reserves and then increase that share capital without collecting money on share call. So you debit all your reserves, not all of them, not capital redemption reserve and security, but capital reserve, general reserve, and P&L, and the credit will be given to bonus to shareholders. This bonus to shareholders, what is credited now, will be debited, crediting your share call account. So your share call, what was debited first, is now credited at the end, that gets closed. Share capital is credited because capital is increasing. Reserves are debited because reserves are decreasing. And bonus to shareholder account is credited there and it is debited in the very next entry. That also gets closed. So ultimately what is remaining is reserves getting debited because it is decreasing, capital getting created because it is increasing. So this is what we need to note when it comes to bonus issue. But you might be knowing this in your audit chapter also, audit syllabus also. You might read this aspect as to matters of specific inquiry. Whenever there is increase in share capital, as an auditor, it is your responsibility to check whether you have received cash against such increase in share capital. And also you would read this in your schedule 3 financial statements preparation, that whenever the shares have been issued for a consideration other than cash, it has to be separately mentioned in notes to accounts. That's what we're going to do now. Whenever a company makes bonus issue, the company has not received any cash. Without cash inflow, the capital has increased. So bonus issue is issue of shares for non-cash considerations, that is by way of capitalization of reserve. So in your balance sheet that you prepare after bonus issue, in share capital note, it is mandatory for you to mention right below share capital that out of the above 1 lakh shares or out of the above 1 lakh 10,000 shares, 10,000 shares have been issued for a consideration other than cash by way of bonus issue or capitalization of reserves. So this is the mandatory disclosure that should be made in the books of accounts. If you fail to do this disclosure, you will definitely lose 2 marks in your answer scripts. So please do ensure that in the balance sheet that is prepared after bonus issue, you would make the disclosure that out of the above mentioned shares, so many number of shares have been issued by way of bonus issue, that is by way of capitalization of reserves. And this, my friends, is bonus issue. In the next video, we'll be discussing the concept of right issue. If you are finding difficulty in any topic of your CA intermediate or CA foundation, whether it is accounts or advanced accounting, please do mention the name of the topic or name of the subtopic in the comments to this video so that I can come about on a video on that topic to help you prepare better for your CA examinations. That's it in this video. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun, it's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you all. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next one. Till then, tata, bye bye, take care, and get lost.